What is up, YouTube? Welcome back to Stocks by the Numbers, and today wanted to change it up, go back to a materials company, something that a lot of you guys may not be familiar with. Some of you guys may have heard of this company and just may have forgotten about it, but in my opinion, company looks very financially sound and stable right now, and might not be the worst time to begin piecing your way into a position, especially for the long term here. Company I'm speaking about, Weyerhaeuser Company, ticker symbol WY, listed here on the New York Stock Exchange. Today is Tuesday. Stock closed at a touch below 29.5 with a little over a 2% move here on the day. And in my opinion, long term, again, I think we're looking at a $50 to a $60 stock, and I'm going to explain why. So, first of all, 52-week low 27.37, 52-week high 43.04. Not the best indicator to use. However, sometimes the way I look at it is, now it's 13.5 points off of the 52-week high and only about 2 points off the 52-week low. So if it does really pull back and sell off, you could take a slight hit and, have the potential to add to the position and lower your cost basis. But also, if it does start popping and running back towards the top of the range, you're getting in near the bottom of the range, so you're going to see, some of the bigger returns compared to other investors who wait for it to, jump above some sort of support in the low 30s or mid 30s before they take a position. We're looking at a market cap here of $21.8 billion. We have a PE of around 9, which in my opinion is tremendously undervalued. The company pays 72 cents a share, which is a 2.5% dividend yield. Now, let's look at some financials, right? If we come down here, you can see on the EPS side, the company has been pretty solid over the last couple of quarters here, beating earnings. And if we switch over here to quarterly, you can see going from about, 2.3, 2.2 billion in revenue and flat and slight earnings, the company jumps up to, 3.1 and about 3 billion respectively for the last 2 quarters here in 2022, with decent earnings north of about 20-25% off of that revenue. Definitely nothing to sneeze at. And if we switch over here annually, you can see, 7.5 billion, pulled back to 6.5 billion, back up to 7.5 billion. And then last year, the company brought in 10.2 billion with, look at those earnings, 2.6 billion off of that 10 billion. Definitely nothing to sneeze at. But, 10.2 billion, and we come up here with a $22 billion market cap, let's say. So the company is trading a little over 2 times yearly revenue from last year, right? Now, again, just to go over this, when I look at these ratios in the private sector, they say that the company is worth usually about 2.5 times total revenue, right? So if this was a privately held company, the market cap would be about where it is now, like 22, maybe even 25 billion, based on the business they did last year. However, this is a publicly traded company, right? So we should be trading like 4 or 5 times that total revenue number. So now we're looking at a market cap of like 40, 50 billion. And, even if it goes up to, let's say like 35 billion, I mean, that is a massive move here. You're looking at almost a double, and that's where I'm getting that 50 plus, potentially $60 stock from long term, right? If we look at it like that, then it makes a little bit of sense. But more importantly, if we switch back over here to quarterly, look at this. In the first 2 quarters here of 2022, company brought in over 6 billion, right? Now, if we extrapolate that for the next 2 quarters and compare it to what they did in 2021, you can see now they went from 10.2 billion in 2021, but 2022 they're going to be up to 12 billion. Now, if they maintain this market value here and they jump up and finish the year at 12 billion, now the company's trading less than 2 times yearly revenue, which of course is even more of a discount. So that's why when you look at some of these numbers, you can see that this company might have the potential to, to really start rocking and rolling here. We move over here to TradingView, and again, we're looking at decent EPS numbers here. And look at these annual numbers here. You had the profit margin pull back to negative here pre-pandemic, and then of course 2020 we had a big jump, and 2021 again. Nice bump up in revenue and net income, and the profit margin jumps up to north of 25%. Even if we switch over here quarterly, again, you can see, pulled back profit margin still maintaining around 19% here at the lows for the last couple of quarters, which really is, some decent numbers. And then, of course, we had a bounce here in the last 2 quarters here, 2022, with a nice profit margin averaging around 25.5%. Now, if we move over here to the financials and we switch over here annually, you can see, right, all of these ratios have really pulled back and become more attractive. Reason being is because it's a ratio, right? So it's the price compared to something else, and it's the ratio of that comparison. So if the price comes down, then of course the ratios are going to be more attractive, right? But, just looking at a few things here, you can see the PE, healthy double digits over the years, pulled back to a little below 12. Now it's sitting at sub 9, right? So the stock is really just becoming more and more attractive. Price to sales, always north of 2, 3, 3.5, and is now pulled back to about 2 flat. Price to cash flow, again, healthy double digits, north of 25 here at this point, pulled back to single digits. Now it's about 6.5. And price to book, again, at one point was lower than where it is now. However, it always maintained, it looks like about, like a 2.5 to 3 price to book ratio. And right now, sub 2. Right? So the company really is looking attractive here in the short term. These are our profitability ratios, which I do like to look at, especially in the long term. As you can see, steady single digits, drops negative, reverses, hits double digits, and has maintained that double digit mark here of about 14% return on assets. Return on equity, basically same story, having a big jump here north of 20% here currently. Return on invested capital, single digits to negative, back to single, up to double digits here, right? Maintaining this 15, 16, 17% mark. Gross margin percentage, around 25, 30, well, I'll say north of 30% here over the years. Now we're north of 40%. Operating margin, same thing. Mid to low double digits here, gets above 20 at a few points, now 35%. EBITDA, earnings before interest, taxes, depreciation, amortization, has maintained, look at that, north of 25, 30 and change. Now we're up to north of 40. Net margin percentage, as we looked at before, was, single digits, hit double, went to negative, back up to double, now north of 25%. Now, again, those numbers, you can't knock those numbers. And this is why I do the type of videos I do, right? Because people out there, they want to buy the PSNYs and the Mullins, right? Because, they're new companies, they're new EV companies. Or, people just want to jump on board Tesla because you're looking at how well the stock did, you didn't get involved, now you want to buy something that you think is going to move, But like they say, past performance doesn't dictate future results. But when you're dealing with a long-term investment specifically, it's numbers like that you want to look at and you want to analyze to see how financially sound and stable is this company, and will they continue to grow the business and grow in value over the months and over the years, right? So we're looking here on stock charts. I threw up the Bollinger Bands here. We have our 50 and 200-day moving averages, respectively. And right now, you can see it hit that low. We have a little bit of an upward channel going here. It's right at the mid-Bollinger Band of about 29.5. MACD turned, rising here. RSI was relatively low, sub 30. Now it's up to a little below 43 here on the daily. Right, so slowly climbing up here. And if we look at the weekly, look at this. RSI at about 35, right, which still makes it attractive. The MACD completely fell off the last several months, and now looks like it might be hitting that support on the bottom, and you might see a little bit of a U-turn. But more importantly, look at how steady this 200-day moving average is here at 28.79 currently. And you can see, look at that, in the last 4 weeks, the company, pulled down and bounced up. Here it broke and then pulled back right to the moving average. And same thing here, broke and then closed right around the moving average. And as you can see here, it pulled down and has now since rose up to 29.5. So this moving average really looks like its support level. And based on what I'm seeing here for the last couple of weeks, I do know markets are rocky, volatile, anything can happen, but at the same time, it does look like it's maintaining the support here at this 200-day moving average. Now, obviously, if it breaks this support, it may begin to seriously pull back, but remember, we just went over the financials of a company, and again, this is a lumber company. So the more inflation goes up and the more things get expensive, these material companies were rocking and rolling because so many people left the big cities to move out, to smaller towns and smaller cities and get their own homes and, work on their own condos and buildings and houses themselves. So that's why material prices really started to go up, and the material business was on fire here. Look at this climb over the months and over the years, getting north of $40. So again, if it can find this bottom here and you can catch this bounce in the short term, you could see a pop back to low mid 30s, potentially even a top Bollinger Band here of $39, $40 again. But again, in the long term, just look at the trend and you can see that this could potentially be a nice buy, and they pay you a dividend to own it, right? So of all the stocks out there are worse buys than Weyerhaeuser, right? And honestly, I'm going to leave it there. I just wanted to show you guys this trend. Here, again, we have the support. We looked at the financials, looks good. And here, even if we look at a max chart, just look at this nice healthy rise here, drop into 08, 09, and then slow and steady rise, sold off in pandemic, and then look, immediately bounced up to 40. But you can see, like, it's in that slow, steady upward channel. Look at the increase in volume, too, down here at the bottom of the chart. People, trust me, people with big money know that regular people need these materials. That's why, over the years, you're seeing these volume increases go into these, lumber companies, the steel companies, these aluminum companies, especially if there's any turmoil happening internationally. God forbid if we, enter into another war, or if someone, puts sanctions on a material or shipments coming in or going out. All of that is going to affect these material stock prices. And again, the price, in my opinion, does look pretty attractive, so might not be the worst time to start piecing your way in here to Weyerhaeuser. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm, helps me get a few more eyes on the channel. If you appreciate the content I'm putting out, please do me a favor. Push the subscribe button. It means a lot to me, seeing the community grow. And if you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. And like I always say, moving forward, I understand markets are rocky. They're volatile, they're uncertain. So I wish everyone success. I hope everyone makes a few dollars. And I'll see you guys in the next one. Have a good day.